So we are the audit engagement team for Nature's Beverage. I'm Zach Weber.
I'm Manos Hussaini.
My name is Tan Tran.
And we're going to start off giving you a high-level summary of the background of what's going on with the agreement. So we entered into an agreement with Coffee Co., which is a global distributor of both coffee and tea. However, recently they have decided that they want to focus on their coffee business. So we obtained a sub-license through the agreement for all their distribution of tea, specifically their herbal tea brand in South America. Now with that comes all of the customer contracts as well in South America. However, we did not get their employees or their distribution capability. We spent $3 million on the distribution rights and $50,000 on various fees, such as lawyer fees, legal fees, and consultation fees. So moving forward, the accounting question is, does the acquisition of the sublicense meet the definition of a business? And then depending on the answer to this question, what is the accounting treatment for the acquisition moving forward? So to go into a little bit more detail about that, I'm going to hand it over to my colleagues. Manos?
Thank you, Zach. So the first issue that we need to address is, does the acquisition of the sub-license by Nature's Beverage to distribute herbal tea meet the definition of a business? In the Accounting Standards Codification ASC 805, we are provided with the definition of a business and what criteria is used when determining if this definition is met. To summarize this definition, ASC 805-1055-3A defines a business as a set of activities and assets used for the purpose of providing economic benefits to investors, participants, etc. And to be considered a business, the following requirements must be met as outlined in 805-1055-4: input, process, and output. We apply these inputs and processes to create outputs. With Nature's Beverage, our output, the result of when the input and process is applied, is revenues from selling herbal tea. We do not have a process in effect with this case, i.e. per the standard, a system or rule in place that will be used together with an input to create an output. In this case, it's distribution capabilities. We also do not have the input requirement in this case, the resource that creates outputs when processes are applied to it. Here, the input is the employees that execute the supply chain, since Coffee Co. retains all of its workers. Per ASC 805-1055-5E, the set of criteria does not meet the definition of a business, since the output does not have an input and substantive process that works together to contribute to creating an output. Additionally, we also look at guidance in 805-1055-5A through 5C to determine single or similar asset threshold. Most of the assets acquired are not concentrated in a single identified asset or group of similar identifiable assets. Why are these not similar assets? Well, for example, the license, supply contract, and customer contract are not in a similar class or type. The license, for example, is an identified intangible asset along with customer contract, but they are not considered similar assets. Finally, per the aforementioned standards, most of the fair value of the assets acquired is not clustered in a single group or a group of similar identifiable assets. For these reasons, and by following relevant guidance, we cannot conclude the acquisition of the sublicense by Nature's Beverage to distribute herbal tea meets the definition of a business. And now my colleague Tan will continue the discussion.
So after determining the transaction is not a business, we decide to recognize the transaction as an acquisition based on ASC 805-10-25-1, which stated, if the assets acquired are not a business, the reporting entity shall account for the transaction or the event as an asset acquisition. Furthermore, the transaction is within the scope of the assets acquisition as it meets the recognition criteria from concept statement number 6 from FASB, which the first one is probable future benefit. So in this case, when getting the license, they also get the customer contract, in which would generate revenue in the future. And the second one is the control the access. So by getting the license, they prevent the competitor from distribute the same product, which is herbal tea in South America. And the third one is the timing. The entity will be able to recognize the assets when they close the agreement on March 1st of 2018. Now, after the recognition of assets, we will determine how to record the transaction that consists of $50,000 for legal and consulting fee and $3 million for the sub-license. Per ASC 805-50-30-1, assets are recognized based on the cost and the transaction cost, in which, therefore, we will capitalize $3,050,000 for this transaction on March 1st of 2018. And then, assuming CoffeeGo will provide a credit line for us, our journal entry would be debit assets license right for $3,050,000 and credit cash for $50,000 because we're gonna have to pay the lawyer and accountant upfront. But then we're gonna account payable for $3 million until we pay to the coffee company. Next, assuming the license will be valid for 7 years, the cost of the assets will be amortized for its useful life. So Nature Co. have a calendar year end, so we will prorate the expense for 10 months. So we're gonna credit, accumulate amortization, and then debit amortization expense to record for the journal entry at December 31st of 2018. And Jack will wrap it up.
Thank you, Tim. So, in conclusion, we decided that it did not meet the criteria of a business, and also we're going to capitalize the cost of the sub-license and the fees as they are incurred. So thank you very much for your time.